I'd like to thank everybody and welcome to today's session titled Creating Unique Opportunities for Buyers. My name is Bruce Rogers. I'm the Executive Director of CIFFA, and joining me today will be two industry experts who I will introduce momentarily. The webinar is being hosted on a Zoom platform, and I ask if everybody can mute your microphones to ensure sound quality for the presenters. We will have ample opportunities for questions at the end, so you can enter them in either on the chat box, or if you prefer, because we've got a small, I'm going to say particularly motivated and interested group, we can open up the microphones, or just through a raise of hand process, we can get to your questions after the session, after the presentations are completed. Today's session will analyze the market for the benefit of executives and owners of growth-oriented logistics, freight forwarding, and transportation companies. There are many ways that a growth through acquisition strategy can benefit your company, such as expanding your customer base and geographic footprint, or even your service offerings. Other routes could include improvements to current IT structures or acquiring valuable licenses and industry experts. The trick is finding the optimal solution for you, your company, and your goals. It is my extreme pleasure today to introduce you to our two guest speakers on this very interesting topic. First will be Nikhil Sathe, currently a Managing Director at Logisyn Advisors, who has 20 plus years of C-suite level transportation and logistics expertise, with 30 plus years in financial stewardship and mergers and acquisitions, especially in 3PL, asset, and non-asset space. As a former CFO of Genpro, Nikhil partnered with the president to scale the company with organic growth, optimize operations, and targeted acquisitions. Previously, he worked as CFO of Kelron Logistics, which is presently XPO Canada, for 10 plus years, helping the company grow from a boutique shop to a recognized player in the 3PL non-asset place in North America. Nikhil also has a very successful tenure with Air Express International in South Africa for 6 plus years, focused on M&A internationally and in North America. He was educated as a CPA from the US, CA from India, and executive MBA from Queens. Nikhil, welcome to today's session. And our second speaker, it's my privilege to introduce Heather Devine, a partner at Alexander Holborn, a full-service Canadian law firm, and is one of Canada's leading transportation lawyers and advocates. For over 20 years, Heather has defended her clients. How about has I defended? Could be a combination of both. Defended her clients in provincial, appellate, and federal courts. Heather enjoys all aspects of servicing clients in the transportation industry and has led international and national legal teams to success in a variety of business disputes. Her combined interest in technology, transportation, and intellectual property enables her to advise brokers, freight forwarders, carriers, 3PLs, and 4PLs on all aspects of supply chain logistics and the movement of goods locally and internationally. Heather has been featured in Best Lawyers in Canada for Transportation Law since 2014 and the 2020 Canada Legal Expert Directory for Transportation Law. And Heather, we are very pleased to have you join us at today's session as well. So without further ado, I'm going to turn it over to Nikhil for the presentation. And again, I encourage everybody to, if you want to ask questions, please put them in the chat. And failing that, we will definitely open up the microphones at the end for your specific questions. Nikhil?
Thank you, Bruce. Distinct honor and a privilege to be speaking on the platform of CIFFA. My association with CIFFA goes back to last maybe few decades, maybe a couple or three of your predecessors that I worked very closely with CIFFA as a very active organization. I'm honored to chair the panel with my friend and an excellent lawyer in the transportation arenas, Heather Devine. We are in a very interesting times in the industry. coming out of COVID, coming after the pandemic, which hopefully we are now towards the residual side of the COVID-19. And we have seen a lot that has transpired in the last 18 months. We put together a small presentation that to give you kind of a journey as to where the industry is today and what our thoughts are on the unique opportunities for buyers in the marketplace that we see. You have already, I think Bruce has been very generous and very kind about our introduction, so I won't go into the details. Something a little bit about Logisyn. Logisyn is amongst a mid-market transportation logistics focused North American footprint M&A firm that is unique because we are operators that we have operated, sold, bought logistics companies for over 3 decades. So we have really gained a very tremendous sense of marketplace. We opened some doors that most people can't even think about. We are transportation logistics focused, right from the asset base to light asset, e-commerce, freight forwarders, fulfillment companies, warehousing companies, hybrids. That's where our domain expertise. We are 125 plus years of combined C-level experience on our senior teams with more than 230 closed transactions and growing. We got a very growing roster of the deals that we are taking to market and successfully closing with a high certainty of close. We deliver customized M&A solutions to reach your business goals. We create an optimal partnership of really creating the value for the buyers and sellers in this marketplace. The market map that we develop for you, the highly synergistic buyers, is something unique that we feel that we're very proud of what we do and how we do it. Because we have deep industry knowledge, like people like us, that I've been a CFO for 25 years. So when we are taking a company to the market, we understand the dynamic a lot different than the typical bankers do, because we understand the transportation logistics sector. We understand each functionality in a deeper sense, and we do a better job at it because of our domain expertise. We understand the key metrics and the performance drivers that really drives the value of the company. We understand the targets and the synergies that drives in order to get the buyers the type of targets that they're looking for in terms of bolt-ons and tuck-ins and expanding their footprint. We are not just the typical bankers. We back into the strategy for the buyers and sellers, and to ensure that we go and help you execute those strategies. We have a tremendously visible and an active M&A presence in North America. We are one of the few unique firms in the mid-market focused transportation logistics that has a Canadian presence and in a very large footprint in the US. So what that means, it means that we present opportunities for Canadian buyers and sellers and US buyers and sellers, both strategic as well as financial sponsors, family funds, to open the doors with a tremendous North American market. We know that the industry is extremely active with the M&A space. I want to talk a little bit about the current freight forwarding and the freight landscape. What happened? Yeah, go ahead, Heather. Yeah.
Comment for the audience. I think
Sure.
That's so important about what you're explaining in terms of your experience and the experience of your company is that with your focus on logistics, you actually understand, and this is from a legal perspective, I think, Nikhil, what you have that others just don't have is that understanding of companies that have what are called intangible assets. And, you know, whether you're dealing with a broker or a technology company, I think your depth of understanding on how to create value, how to capture value, and as you said, how to do the growth through acquisition with other companies that have intangible assets. I think the context for your presentation is very important. And I just wanted to say, it's very, very different to have your expertise than someone who's used to just dealing with what I might say would be common assets, that are ordinary. And so I think the context of what you're saying is extremely important for our audience.
I think that's a very complimentary remark. Thank you very much, Heather. What the industry has seen in the last 18 months is tremendous tailwinds. We have seen the freight industry, logistics, transportation has come out net winner in the last 18 months. The margins have been solidified, the digitization has increased, and the freight market continues to be extremely strong and very robust. Capacity is tight, ports are congested, driver shortages are happening. There is a tremendous import surge happening in the United States. 60 million TEUs come into the United States every single year, and Canada is not an exception. So freight continues to be strong. We continue to see a tremendous overhang in the supply chain, and that overhang means container shortages, capacity on the vessels, capacity on the trucking side. I was speaking to a senior DHL individual a couple of weeks back, and he mentioned that the air cargo capacity has been the most tight that he has ever seen in his lifetime. And we are not even during the holidays. The holidays will start in a couple of weeks in the US, especially Thanksgiving. The intermediary gross margins, especially forwarders, fulfillment companies, e-commerce companies, freight brokers, digital freight companies, gross margins are extremely strong. In today's market, a lot of logistics companies are hitting the ball out of the park, which now also is stimulating a lot of M&A activity. We got strong and progressive valuations are going on. Valuations are influenced by the financing environment. Capital structures are influenced by the capital markets. Few sectors that we see, there's a tremendous secular growth credentials that are happening. One is e-commerce. B2C is getting very, very strong. In the US and in Canada, in today's market, the warehousing space is getting so limited. The occupancy is all-time high, and the fulfillment market is absolutely on fire. The bottom line, the industry is thriving on the pandemic. And I think the industry has also seen a tremendous level of technology innovation and digitization in the last few months. Heather, do you want to say anything on the slide?
I agree with you. If you look even at, I agree with all these points as being important. And I think as we go forward on the substantive part of our topic, I'd like to come back to this slide to say these are the areas where you can look for perhaps undervalued companies for acquisition. But I agree with you on all of your comments, Nikhil. I think air cargo is so tight right now, and e-commerce is growing. It's attractive, and it's also in high demand. So I agree with you.
Thank you. Moving on to the next slide, we want to give folks understanding as to what's going on in the market. We have a overhang or a broken supply chain. Our grocery bills are going up. We have got inventory shortages in the stores. This is all the COVID impact. And this overhang means production delays. The microchips are in short supply. The automotive manufacturing is delayed. This is a broken supply chain. There are good indications that it's easing up, but it's easing up extremely slowly. In the last 6 months, we have seen Home Depot and big box retail stores going and booking vessels. They're trying to cut out all the forwarders because of the capacity issues. Never happened. I've never seen that before. We have seen a tremendous amount of innovation and digitization. Digital commerce has exponentially risen through the pandemic. Work from home environment, a tremendous amount of technological changes that a lot of small businesses have to make. Increased business digital spending. Companies are digitizing rapidly. And I don't think we are coming out of COVID means that they're going to slow down on the digitization. The maxed UPS and FedEx capacity, Canada Post, USPS, UPS, and FedEx are absolutely maxed. What does that mean? The final mile, last mile deliveries are getting impacted. Your delivery windows are getting stretched. And you got some tremendous amount of shortages going on. So you're asking for something to be delivered via Amazon. Your delivery windows are going to get stretched and you're going to pay a higher price because it's a high cost distribution model. And there are a lot of changes happening in the marketplace. Less globalization, less equality, increased digital landscape, and the changes to the holiday schedule. And we are now just at the cusp of the American Thanksgiving, which is one of the biggest holiday time in the US. And then we followed up with December on holidays and Christmas. The infrastructure cost is increasing. Regulatory compliance is going up. I think that's where, Heather, I think your inputs will be tremendously important because we have seen right from Obama administration to the Trump administration, and now with the current administration, there have been tremendous significant changes to the transportation regulatory framework, whether it is hours of service rules, whether it is ELDs, those have been big changes that are coming, and the regulatory compliance means increased cost to the operators. The integrators, the multinationals and integrators moving into niche markets is driving the growth rates. And the shippers are getting very sophisticated. So the rates are under pressure, the capacity is tight, and we know that this market is, the intermediaries like forwarders, NVOs are going to have a tremendous growth curve going into 2022. We touched upon some of these in my previous comments. Significant industry tailwinds. When you are looking for growth opportunities, whether you want to add on, bolt on, tuck-ins, or whether you want to expand your footprint, you need to align to your strategic goals. Back into your strategic goals and look for targets that are accretive to your growth and accretive to your strategy. It's extremely important. Don't look at every target that is available because it's available for sale. You got to add a target that is strategic value to you. Either it's going to expand your footprint, you want to get into a particular competency that you don't have, or you want to go to a particular geographic markets that you want to be in. That is your strategic goals, and that is very important. Must be very clear about accretive add-ons. You need to be extremely clear about what type of companies you want to book, you want to add, and you want to acquire. I touched upon the valuations in today's market. If you are a seller, you want to see a tremendously opportunistic market because the valuations are all-time high. The capital structures are extremely flexible. There is a tremendous amount of liquidity in the market. We learned recently that almost $1.4 trillion of dry powder is available in the market to be deployed into deals. But that is not just about transportation logistics overall. But T&L attracts a lot of that investment because of the industry has shown a very high growth curve and a very attractive return on capital employed. Certainty of close is very important. I think at Logisyn, we tremendously care, not just taking a company to the market or working with our buy-side clients, but our biggest paycheck only happens when we actually close a transaction, not when we get a client on board. So that certainty of close is extremely important. And the way we run our engagement processes, that efficient engagement process will lead to a successful outcome. So your strategy of going to market, your market map, your valuations, your structure and price, your engagement process, data quality, all that is going to lead to a successful outcome and successful close. Heather, any comments?
Oh, I agree with you. So, I mean, I think the most important point for me from a legal perspective is that my job is to help people like you and your clients close. So there are two different ways a lawyer can act in these deals. One, you can try to impress the clients and throw your weight around and find problems. Or the other is where you can identify issues that need to be addressed, perhaps. Maybe it results in a price adjustment. Maybe it's just even advice on risk and how to manage that risk. But I think that the certainty of close is everything. And a lawyer, a good lawyer who's helping out on a deal is going to want to make sure that they don't interfere with the certainty of close. And so I think that would be the most important. The other thing that's also important, I find, is counsel. I usually, well, not usually, but sometimes I have negative stories for each of your points. And that is where people have tried to achieve an acquisition and they can't close, or they close and they regret it later. And I think it's very important. And I can predict usually if there's going to be success 2-3 years down the road with integration, is that if you're looking at a target, it really should align, as you said, Nikhil, to the strategic goals. It either has to fit a niche, it has to answer some need that you identify you will have or you cannot answer now. And for example, take a look at IKEA investing 130 million in Bolt Logistics. Just as you've said, Nikhil, there is a, there's so much demand against UPS and FedEx and last mile. So there you have the IKEA stepping out and saying, we see a need, it aligns to our strategic goals. We're going to invest in Bolt Logistics, a Canadian logistics company. And you know that not only contributed to higher valuation, but there's a certainty of close. It's almost like it's like inevitable that the two will come together when it's aligned. So I agree.
I think you bring up a great point. Those kind of synergies are very closely looked at by the market and the big box retailers like IKEA. It's definitely a real good test case. So impact of COVID-19 on the logistics sector. Logistics continues to boom. It continues to attract investors. The return on capital employed is very attractive. You get 20, 25, 30% IRR, internal rate of returns. Logistics is a very high priority investment area. The 3PL revenue impact, the freight forwarders and NVOs have continued to solidify their margin positions and their top line positions with the transportation of vaccines and transportation of PPEs and all the incidentals that are happening with COVID-19. There is a positive revenue impact on the freight forwarding segment of the business. Fragmentation is a big part of our industry. There is a fragmentation in almost every sector of logistics. I'll give you an example. We talk about freight brokers in the US. There are 5 what we call super large companies, 25 large companies, 400 mid-sized companies, and 14,900 moms and pops. Look at the motor carriers in the US. There are more than 800,000 members of ATA, which is American Trucking Association. So 87% of the trucking companies own less than 5 trucks. Huge fragmentation. Look at e-commerce sector. 45 to 50% of the market share in the US is controlled by a 50,000-pound gorilla called Amazon. Everybody else is in the balance of that 45 to 50%. And that fragmentation continues to get deeper. But that in itself presents an opportunity for M&A to build scale and size and to consolidate and driving synergies. The fragmentation presents a unique opportunity for buyers to really build a scale and size of synergistic targets and stack them onto each other to build scale and size. Scale and size is an accelerator and a multiplier. Now we are beginning to see the real impact of COVID, negative and positive. There's a predominantly positive impact on the logistics industry, but there are sectors that are still reeling and that are still very slowly coming out of it. Money travels, consumer travels. We know that people are just beginning to get on planes. The restaurants are open, concerts are happening, activities are beginning to get back on track. We will see that the consumer spending is going to drive the economy going forward, but it will probably take another 6 months before we see the full economic activity going on. Back to the M&A landscape. If you are a buyer, there are lots of opportunities for you to build scale and size. If you are a seller, there has never been a better time to monetize and to get a fair value with a good structure for your sales side mandate. We feel that this is a message to the buyers and sellers. It's a level playing field and a tremendously opportunistic market. Heather, any comments?
Yes, I agree with you, Nikhil. I mean, I think one of the things with regard to your point that logistics is booming, I don't think that we will ever go back to the ways that we did the shopping pre-COVID. And I think in terms of customer demand and expectation for delivery of all sorts of goods is not going to decrease. In fact, I think as the younger generations have more spending power, you will just see it solidified. One of the things, though, that I think is interesting with regard to your comment on the fragmented sector, I hope that the audience is really taking note of the research and the information you've provided, because the amount of opportunity that lies in that fragmented sector, particularly in Canada, for American companies, it's significant. We are so less regulated. We have so much more capacity to handle almost every aspect of the arrangement for the transportation of goods in Canada that I think that we're very attractive. And the other thing that I'd like to mention is that I find some of the clients I have are tracking very much, Nikhil, the changes in trade agreements. So under President Trump, and a little overshadowed, I think, with COVID, were some of the significant changes where the Americans stepped out of certain markets. So for example, here's how you can pull it all together. You have goods moving from Asia, more goods coming into Canada from Korea. Because we don't require NVOCC licenses, because there's so much congestion in the California port, you start to look to see what needs do you need fulfilled. And the amount of goods that are coming from Asia to the west coast of Canada to very different ports, then being moved across Canada by rail or by truck, and in some cases by air, so that they can then go into the United States, increases every day. So I think you've hit the nail on the head with each of these points that you've presented, because I see this movement aggressively every day from a lawyer's perspective.
I think you bring a very different, very unique perspective, Heather, on some of these points from a lawyer's perspective. We talked a little bit about the impact of COVID on M&A, but I can't emphasize enough that if you are a buyer, there's a cheaper money available. There's lots of opportunities available for you to consolidate, to build scale, to get some really synergistic add-ons and tuck-ins. We have a significant buy-side work that we do with right from $1 billion companies to small companies. We go and find them synergistic targets. This is a very, very active landscape. There's an enormous dry powder with $1.4 trillion of private capital, strong balance sheets of strategic players that they're looking to reinvest into really accretive assets. If you're a sailor, you love the space because the valuations are progressive. Overall, there are three strategies typically any CEO or any C-level suite will follow in a logistics company, or for that matter, any company. Organic growth, external growth, and what I call optimized operations. So organic growth is you grow organically into certain niche segments of your business. External growth is growth through acquisitions, through synergistic tuck-ins and bolt-ons. And optimized operations is deployment of technology, automation, AI, and driving the cost out of the business and continue to operate like a lean enterprise. This is a tremendous opportunity. We have never seen so much of money being invested in transportation technology. Billions of dollars are pouring into transportation technology in the last 2 years, and that has increased through the pandemic. I now want to talk about the strategies for buyers and investors. That's a topic of our discussion today. What are the unique opportunities for the buyers? Look beyond your core business. Don't just look for your core, but look what can complement your core business. Look for those additional synergies. You got to be creative about your strategy. Then you require to be creative about the deal. The deal structure is as important as the enterprise value. A lot of people get mixed up between the enterprise value and the structure of the deal. Both are equally important. The valuations are influenced by the financing environment, your cost of funds. Your structure is influenced by the capital markets or your debt equity in the company. So be creative about the deal. And this is very critical. Right now, I don't think the sailors are getting penalized on the multiples, but you are getting impacted on the deal structure depending on the consistency of your earnings and the consistency of your financial metrics. You require experienced deal makers to be working alongside you to make sure that if you're a buyer, we protect your interests. If you're a seller, we maximize your value. That focused diligence and scenario planning is extremely important. And you require Logisyn and Heather type of experienced deal makers to really be able to get to the finish line. You also require to de-risk your M&A strategy. By de-risking your M&A strategy, there are two ways you can do it. Go and find most opportunistic targets that are going to create accelerator and a multiplier for your earnings and for your synergies. And you're also going to create a structure that will provide the de-risking strategy. For example, how much cash at close versus how much is sailor note, how much is deferred payments, all those, the mechanics of delivering that value is very important. And you know, from a lawyer's perspective, and I will say this, Heather, that you require a lawyer who's also a very crafty negotiator, along with somebody who is going to really be taking the legal side, the reps and the warranties, depending on the type of deal, whether it's a stock purchase deal, whether it's an asset deal. But you want a lawyer to be the chief negotiator for you. Sometimes it's arm's length and a third-party negotiations. My belief in the last 30 years of my career M&A opportunities are never found. They are often developed. What we sell in the marketplace is a trust and credibility. Competencies and our domain expertise is given, but people give us the reins of their business or the keys of their business to take it to the market because they trust us for our integrity and for our credibility. Heather, I know you will have some comments on the slides.
Well, I agree with you 100%. And I'll tell you the thing that surprises me the most. Well, first of all, let me say this. What I agree with Kate, and you find your own targets, but evaluation of whether or not they fit in with your business, I really don't understand how people think that they can tiptoe into the M&A market without someone having expertise as you would have, Nikhil. And when clients come to me and they say, I just want to hire a lawyer to paper the deal, I've already negotiated it. I look at that and I think, oh, you've missed so many opportunities. Your due diligence could be faulty. And not only that, they may not have gotten the best deal. So I agree with you. You should have trusted advisors. You should feel very, very fair about asking them, what will be the cost? What will they be charging you? And what are you going to get for your money? I think with lawyers, asking them what their fees are, how big the team will be, make sure they're not, I call it gold bricking off your deal if you're concerned that you're going to be taken advantage of. But once you feel that you've had a very upfront conversation with your advisor on the spend, then I think you should rely on them as much as you can. This is what we do for a living. We absolutely love it. Whereas what you do for a living, I think, is you're in the logistics business. And then the next thing that I think is also very important is the due diligence. Do not short shrift yourself on the due diligence. And that is something you want to negotiate with the lawyer. Make sure it's not pushed off on junior lawyers or clerks. Make sure they tell you what is their strategy for due diligence. I know a company that acquired an American company based in California, and there was an undisclosed class action. And they didn't have legal counsel to do the due diligence, which, by the way, not only can you get reps and warranties insurance, depending on the size of your deal, but your lawyer has insurance that you can rely upon. And so this litigation that was undisclosed ended up by not only killing the deal, but also bringing down the buyer. And I guess my last point to say, not only do I agree with your point about advisors, but I also think it's very important that you negotiate, because sometimes I would get someone like you to do the negotiation. Consider in some circumstances you're getting a family-owned business, a business that's been adored and it's had family members working there. I find out they've got all sorts of funny little condos, assets, Costa Rican summer properties. And you're trying to deal with that without causing any hard feelings in terms of looking ahead, perhaps for integration. And that's where a good advisor or lawyer comes in. We make it black and white. Obviously, it's a professional negotiation, but things can be dealt with very appropriately by someone who's an advisor and then moves on. Whereas if you, for example, maybe you have some of the expertise of the previous owner, they're going to stay and help you work there for 1 or 2 years. It's very difficult to be critical of the family home in Costa Rica, which may not be disclosed, frankly, to other family members. It's very difficult to deal with that and then work with them later. So on every aspect, I agree, Nikhil. But as I say, I would have turned to you first on the negotiation before I turned it over to the lawyer.
Yeah, I've been there, done that a few times. So our buy side, yeah,
yep.
Go ahead.
Oh, sorry, I was just saying it's worse sometimes when you find out about these assets in the family-owned businesses and not every family member knows about them. Sometimes you get them to get rid of the assets before they put themselves back up to be acquired. But yeah.
Thank you, Heather. I want to just quickly go over our buy-side process overview. What we call a consult phase is a kickoff phase. We try to understand your goals and what you're trying to achieve in a kickoff phase. Then we define the strategy. We develop the kind of a market map. Then we identify the targets, we help you do the diligence, and then we go and close the transaction and execute and help you integrate this business. So I think the integration and maximizing the synergies is a very, very important part of the buy-side process. The buyer organization always have to lead in terms of that integration, because they are the ones that is taking an add-on. So there's always an obligation on the part of the buyer organization to be the lead horse in terms of integrating and maximizing synergies. This is getting a little bit more granular, but we talked about the buy-side blueprint strategy, the logistics targets, service offerings, company criteria, where you want to buy this, the geography, the financials, the assets, the customers. What is important to you? What are you trying to buy? You're not just trying to buy a book of business, but you are trying to buy something special that is going to be an accretive add-on and a strategic value to you. And I think we are not just a transactional buy-side advisor to you. Because we are domain experts, we really play a significant contribution in shaping up the right strategy and putting the right targets in front of you. I think this is the critical piece. You'll see many advisors who are just doing a transactionals. Hey, here is a target. Do you want to buy this company? We go beyond that. We go to the strategic roots of why you want to buy something, at what valuation you want to buy, why this is a much more synergistic value and a strategic value to your organization, and how do you integrate this? Because many of us, not just bought companies and sold companies, we have integrated companies. We have maximized synergies. I think this is a very key part of the process. So we go with the suspects, which are unqualified targets. Then we go to the prospects with the qualified targets. We get 3 to 5 engaged targets in terms of diligence. And then we do an M&A proposal with 1 or 2 deal opportunities. Total typical span, if there is a motivated buyer with a committed resources on the buyer side, we probably think that within 3 to 5 months or 4 to 6 months, depending on the scale and the size of the target, will probably help you close a really good accretive opportunity. I love this slide. This slide is one of my favorite slides, and it really tells you what drives value. We divide it between 3 factors: quantitative, qualitative, and process. Operational, financial, and strategic. If you have more than 25% revenue growth, you have more than 25% EBITDA growth, it's no brainer that this is positive. There are qualitative factors. Are you a market leader? Are you a high growth? Are you a differentiated? Are you a value-add business versus you are a commoditized business? Do you have a deep, strong, excellent, capable management team? Have you achieved growth? We always typically tell sailors that you need to have a really consistent trajectory for 4 to 6 or 6 to 8 quarters before you take your company to the market. That is where you're really going to drive the value. You don't want to go to the market with a hockey stick, because it's difficult to value the company with a certain growth. The buyers don't know how to value the company. They're almost invariably going to discount it. So the processes are very important. Your budgets, your ability to pay, your broad buyer coverage, your relevant experience. So this is the valuation drivers and the detractors. And you need to really find out where your company stands in terms of the market value and in each one of those criteria. There is no science. I always tell people that the word multiple is overemphasized. there is really no hard and fast number. People say, "Oh, I want to get 10 times of my EBITDA multiple." It's a number that you back into from your financial model. So multiples are overemphasized, and it's a part of the financial model. So just don't go hung up by 6 or 8 or 10 or 12 times. Every asset has its own value, and it falls within a particular range. Your scale and size of $1 million of EBITDA company is differently valued at $10 million of EBITDA company. Your niche or differentiator, your value add component versus a commoditized business, your vertical expertise, your specialty business versus generalized business, your growth opportunities, your key growth drivers, your consistency of performance, financial and operational metrics, all go to add the value. Heather, do you want to say anything about this? And now there's a chart on the right-hand side which talks about the historical EBITDA multiples, and I will qualify this, that this is based on the data that has been captured in predominantly publicly traded companies or private companies which have been caught up in the domain and the public knowledge. A lot of the private companies, transactional M&A information do not get captured. So I don't think there is any scientific data available in the marketplace that tells you what the multiples are, but it gives you a guidance as to what every type of business is going to go in terms of its value bands, in terms of the valuation. Digital freight companies, which is the new breed of logistics companies that are coming into the market, their pro forma valuations are based on the top line revenue and not really necessarily based on the EBITDA or the free cash flow that they generate. Heather, do you want to say anything about this?
Yeah, I agree with you. I mean, when I first started my career and, going to New York City and trying to meet with some of the private equity companies, that was when we were beginning to say, they were very interested in non-asset or asset light. And then, the brokers were pushing to be recognized to have a higher multiple. Now what I find is companies come to me and they say, I'm a technology company. For a while it would be, you look like a broker, you act like a broker, but you say you're a technology company. But now I actually see companies that come to me just point blank and they go, I am a true technology company. And in fact, I don't even think that I need to have the registration as a broker. They're looking to get multiples 14 to 18% because they're hoping that they'll be recognized as pure technology. So I agree with you that there's a trend for it to go up, and I also agree with you it's overemphasized, but that's pretty well all I ever hear from clients who come to me. It'll be, how do I monetize the services I provide so I can get the highest multiple? Now that's probably more because they're looking for investors or for someone to come along and acquire them and make their dreams come true. But no, I agree with you 100%. It's definitely a trend upwards.
Yeah, now, unless you have any other remarks, Heather, at this stage, I'll turn it over to Bruce.
I think I'd like to make two remarks, and that's this. So there's two issues that I think as a lawyer I see that are very helpful, probably to the people who are in this audience, because I have a lot of clients who are members of CIFFA, and I'm a big fan of CIFFA. And this is number one. If you think that someone's going to acquire you, or you're looking for what I think would be a deal, and this is as a lawyer, I think you want to look for a company that's considers itself a broker or a technology company, but hasn't invested the money to monetize its goodwill. To me, that's where you can find a lot of good companies that have developed their IT, they've developed their IP, they have a presence in the market, but without investing the time and money to actually capture that value, I think you might sometimes be lucky enough to find a bargain. And then I think the second point I would make is, if as you are doing, because you had a slide up there on the operational, which would be more my understanding and of expertise, where I'd be looking to either find value or create value. And I would say that one of the very most important things is to be investing your money in cybersecurity as part of your risk management program. if you invest in your risk management program going forward, it's going to hold you in good stead. If you're looking to acquire a company and you find they have a very robust approach to privacy and cybersecurity, even though they're non-asset, and I don't mean even though, it means that they've actually taken the time and money to protect that asset. And that, again, you can work to monetize. So just a few tips I thought I'd pass along that I've seen the last year.
Great. Well, thank you very much, Nikhil, for the very informative presentation, and Heather for your comments and advice. You're giving us, from a legal perspective, some things that we necessarily may not have thought of previously. Again, from an audience perspective, at the bottom of your Zoom platform, you will have a reactions area. In there, there's a raise hand feature. If you have any questions, please feel free to raise your hand and we'll get to you. We've got about 8 minutes remaining in this session. I want to make sure that we cover off any questions that you may have. Nikhil, from my perspective and listening to the presentation and understanding the market as it is today, with the carriers, the rates of transportation have gone up tenfold. So when you're looking at a company, especially for this audience is the buyers. I know we have one for the sellers in a couple of weeks from now, and I think the sellers they're looking at it from a completely different perspective. But from a buyer, you want to make sure you're getting that true proper value for the business that you're looking at. And really what has transpired over the last 2 years, from our perspective, it is not going to be sustainable. It'll probably continue for throughout 2022, but it'll probably change back into 23. So what the market is currently undergoing today is probably not sustainable. But I think what occurred in 2018 and 2019 is ancient history. I don't think those days are coming back. So that being the case, the market is going to fall somewhere in between. So from a buyer perspective, I think it's somewhat challenging in order to determine and try to assess what is that proper value that I'm looking at and trying to acquire a business. Can you just help provide some guidance in that area?
I think that's a great question. And we often get into those kind of situations. To answer this question, what typically we do, especially given this crazy times that we're living in with uncertainty due to COVID, pre and post, we take a 3-year average. So we typically will do 18, 19, 20, or 19, 20, 21 as a 3-year average. If your current year is doing exceptionally better than the 3-year average, you are going to be valued based on the greater of the two. But the deal structure will get impacted based on the lesser of the two. In the sense, the buyers want to de-risk their strategy. They do want to provide a fair market value, but they do not want to provide so much of cash at close. So the buyers hold back on that structure by providing less cash at close, just because the COVID year has been a hockey stick, or the current year is a hockey stick because of exceptional market conditions. And the last 3 years average is relatively softer as compared to the current year. And we have also seen the other situation where the current year is relatively softer as compared to the last 3. So the approach is the valuation is based on the greater of the two numbers, but the deal structure is based on the lesser of the two, and the buyers hold back that strategy to determine the best mechanics of delivering that value to the seller.
Sorry, understanding that, it's I think it's going to be a challenge. I think it's going to be challenged, especially if this continues in for another 12-month period of time through 2022. I think that 3-year average is going to look somewhat skewed for what 23 is going to look like. So I can appreciate the challenges that creates, and I guess that brings Heather into the conversation. You got to help protecting us, Heather. What do we do?
Well, I mean, I think what you want to do is you want to be very careful with your contracts, because no matter how good your contracts are, one of Nikhil's slides showed that there's a fragmentation in the supply chain and constantly changing channels. So I think what you want to do is not only make sure you have a very good contract that lets you out of a bad deal, but also tries to make it sticky. So no matter what penalties you might have, or no matter how secure your contract is, if it can be canceled in 30 days, that's also quite disruptive. But if you have an agreement through that a contract can be canceled or changed with even shorter than 2 weeks notice, but there's an agreement to work together to come up with, say, another side deal or such other arrangement, then what you can do sometimes is you find it's very dynamic. The contracts are being broken because one party can't perform, but then both you come together and say, okay, we can't do it this way. How are we going to do it? So let me give you a good example. What's happened out in BC? You've got a highway that's closed because of bad weather, completely unpredictable, and yet again, another problem. How were those goods moving? So what I'm talking about is a contract where the two of you come together and you say, okay, we can't move these goods right now. We're going to approach our end customer and make sure they know it's clear. But we have worked into our contract an agreement to work together to get the goods flowing, no matter what it takes. Is it rail? Is it air? Who's going to eat that cost? How do we pass that cost along? Instead of saying it's a competitive market, the goods can't move by truck. Someone's going to have to eat the higher cost by air, and then one party's aggrieved and the other party's happy. So how do you protect yourself? I think you have a lot more collaborative agreements, and you make sure you have agreements and you understand your agreement so it's enforceable when, for example, a whole highway gets shut.
That's great. Thanks very much, Heather. Again, we've got a few minutes left. If anybody has any questions, please feel free to raise your hand, and I'll be sure to get to you. Nikhil, in your presentation as well, you talked about the process that Logisyn takes into consideration when somebody is looking for potential acquisition. So from a buyer perspective, I think the way that, if I interpret it properly, the buyer doesn't necessarily have to go out and find its targets that it's looking for. I think your group sort of assists with that. So it's really incumbent upon the buyer really to look at or to identify what complement they are looking for their business, and then work with your group to identify and try to make the best fit for that acquisition.
Yeah, that's another good question. Often we find when the buyers come to us, they don't have a very good clarity as to what type of targets, what is the financial matrix that they should be looking for, what is the strategic backup to that acquisition growth objectives. So I think the buyers have to really do a lot in terms of giving us clarity, and we do ask those probing questions. How does it back into your strategy? What is the type of targets you're looking for? But yes, our group does go and find, because one of the best things that we bring to the table is a tremendous amount of network. With all these years that we spent in the industry, we have all built an extensive and a very robust relationships and network of companies that we know or we know of them. And a lot of those are not going to the market directly, but they say, hey, if somebody is in a proprietary environment is looking for some synergistic targets, and here is a type of buyer I'm looking for, and the buyer is looking for, here is a type of seller we are looking for, we are the best matchmakers.
I think that's very helpful, and that is very helpful for this audience, because I know sometimes they struggle with identifying that proper target. So I think that's great information. Again, I've got 1 o'clock right now, and I don't see any further questions. So I think this was a very informative session for our group. I think you provided a lot of information. Heather, thank you very much for your legal advice. I think that's extremely important and critical for our members as you start to look at acquisitions, that you do make sure you have the proper representation representing your business interest as you start working down the road of concluding some of these contracts. So again, I'd like to thank both of you very much for the work you put into this, and for the time you spent with the CIFFA members on this call. And again, from a CIFFA membership perspective, participants, again, thank you very much for spending your lunch hour with us if you're on Eastern time. Greatly appreciate it, and I hope you picked up something. And after this presentation, if you're on the other side of the fence and you're looking to perhaps sell your business after this session, there is another webinar coming up in a couple of weeks' time representing that side of the house. So thanks, everybody. Greatly appreciate your time. Thank you.
Thank you, Bruce.
Thank you.
CIFFA. Thanks, Heather.
Thank you. Bye-bye.